Hey, it's Michael Saul, also known as Tiny. This is the market video for the week of July 28th, 2014. So, this is a chart of the semiconductors, but before I start with the market look, just want to follow up on an announcement I made last week. So, Paul and I are real close to completing our two new websites. One of them is going to be a place where you'll be able to access a blog and also sign up to get information on when we're holding webinars. We have the Sunday night strategy sessions that we were doing weekly. We're going to go back to that. And we also have some other free webinars that we have planned. And we'll also send you information that we feel will assist you in your trading. So it's 100% free to sign up. You just have to put your first name and your email in, and you'll be able to get the announcements. The second website is the website where we'll have our newsletter up and running. We'll have a membership site there where you'll be able to access our newsletter, which we're getting ready to launch. We should be going out full steam with this the middle of August. We should have it completed this week, and then we'll come out the middle of August with the launch. And we're also going to have a couple of courses, such as the Mastering Market Timing course and the day trading course. So we're getting those together. The Mastering Market Timing, that's going to be available pretty soon. We just have to get the videos recorded. We've already mapped out the content. And like I said, the newsletter should be the middle of August. So just, be patient and stay tuned for announcements on the weekly video. Should have something to tell you next week, latest 2 weeks. All right, so that's it. So now on with the market review. So this is the semiconductor index, and if you see here, we have a pullback through the 50-day moving average. I want to look at the bigger picture here, and you'll see that, right here we had 641.90 marked off as resistance, and it went to 652, so a little bit above that, and then it turned. But now what we want to do is we want to take the Fibonacci grid, and we want to go like this, and boom, there's your next resistance is up here at 764.50. Now, if you compare the semiconductors, which are really just about 38% back from their decline, you compare it to the Qs, which are almost 79% back from their decline. So you see the semiconductors have lost their leadership ability, in my opinion. That doesn't mean that they're not important. It doesn't mean that you shouldn't watch them. Quite the contrary. Okay, it's always important to watch key sectors such as the semiconductors and the financials and stuff like that. But it's really not necessary to say, okay, where the semis go, the market goes, or the NASDAQ goes, because as you can see, look at this real solid move here by the NASDAQ. And yeah, it pulled back the end of last week, but not what the semiconductors did. So, just keep your eye on this. Could eventually, if the semiconductors go into a full-fledged bear market, yeah, it's doubtful the NASDAQ is going to be able to fight that completely. But as of right now, and, the reason I'm bringing this up is I did get a phone call, and they wanted me to, talk about what the semiconductors are doing here with the market and how come we're not pulling back. And, the semiconductors, in my opinion, really haven't been the leaders in, some time here. So I'm not saying that, like I said again, I know I'm repeating myself, but not saying they're not important. But, just keep your eyes on them, but you don't have to rely on them just for leadership. All right. The S&P 500 still moving higher here. Really nice short-term uptrend to go with the long-term uptrend, okay? Again, a lot of top picking here. I don't see anything that's telling me the high is coming in here. And I'm going to tell you, I probably will miss when the actual high is in. All right? It's not my job, and it's not your job to pick tops and bottoms. It's our job to identify the trend, and it's our job to look to get on board that trend. And right now we are just in a very tight, grinding higher market. Okay? So no reason to try to short here unless you're really looking at stocks that are performing craptastically, okay? If you're a market timer, if you're looking at the market overall, then you're looking for sideways consolidation and pullbacks here to look to get on board, all right? Dow, the Dow got hit a little bit hard. I watched the 50-day moving average for support. Still looks, still looks okay though. Nothing there. Now the mid caps. Here's where we start looking at some of the indexes that aren't looking that great. So the mid caps, they're holding the 50-day moving average for now. Okay, but you can see right here we have a consolidation here, and if we continue to pull back in the market, okay, the mid caps would be one of the leading indexes to watch to the downside here, because if this gives way on from the 50-day, yeah, the first target would be a quick move here, but this could get moving here towards the downside and maybe even down towards the 200-day moving average. And the Russell looks worse than the mid caps. Okay, the Russell looks, not really good. It's sitting on its 200-day moving average. Yeah, it hit its high and rejected, so that target was hit. But right now, it's showing poor relative strength. Can we rally without the Russell and the mid caps hitting new highs? Yes, we can. But in my opinion, it's a flag. It's a red flag, and it's something that we definitely have to pay attention to. If the market turns here, the broad market turns here, the buyers dry up, okay, I will be watching the small caps and the mid caps to lead the way down. Now, I don't think we're going to see a huge correction, okay, until we trade to this 98.57 number at a minimum. I'm not saying this is all she wrote. I'm not calling this the top. In my opinion, though, I think until we hit that number, pullbacks, consolidations, etc., are going to be buying opportunities. Okay? Now, does it mean we can't get a pullback before then? Of course not. So far, we're just getting shallow pullbacks, but that doesn't mean that we can't get a bigger pullback that could turn into a correction. And I could be wrong. I've been wrong before. I'll be wrong again. All right? The key, nothing wrong with being wrong in trading. There's something wrong with staying wrong. There's something wrong with sitting there going, well, this is impossible. We have to go up. No such thing as have to. All right? We already looked at the semiconductors, but real quick, we see that close below its 50-day here. Intel still looks nice and strong, though. All right? Intel looks strong. Clad Tanker, earnings related. So you got the 50-day moving average coming up. All right? You can watch that. Let's look at stocks like NVIDIA. Looks like it wants to test its 200-day moving average. Micron looks good, trading sideways. Banks, yeah, banks are in this, I don't know. I guess you could maybe draw a diamond here, but why? It's just basically a consolidation. Looks like you could draw a diamond, though, right? Which is just another way of calling it a consolidation, really. Okay, there it is. All right, so I watch the banks here, see if it can break out and retest the highs up there. Bank of America, sloppy. JP Morgan, okay. We recognized that consolidation last week, and it did release to the upside there. Citigroup did the same thing. Weren't big movers, but they are the banks. They usually don't move that much unless there's some nasty moves. And here's Bank of New York on a nice move as well. Broker-dealer, just sloshing around here. Goldman. Okay, Goldman with a nice push up. Now it's pulling back. Watch for a bull flag here. Morgan. Okay, watch the highs up here. All right, Priceline.com, what I'm looking at, it's expensive, but it's in a nice triangle. So maybe if you're looking at options, all right, it's an expensive stock, all right, but if you're looking at options, that's another way to play it if it were to break out of this triangle here. Netflix lost its 50-day moving average, but not really a lot of damage here. Google continuing to climb higher. Apple, I think, is going to 100. Amazon, boom, ugly, was looking so great. This is more like a move ahead of earnings, which is a very strong tradable trend. But for this to recover, it first has to get over its 50-day moving average here. I see I'm going long on time here with 10 minutes here. Bonds at the high end of the range here, and they're looking good. I mean, a lot of people were shorting bonds because the market was on such a move higher, and they don't understand that correlation, or that inverse correlation, and more like it doesn't always exist. That's not 100% inverse correlation. It's not stocks go up, bonds go down. No, it does not always happen. So you got to be careful. And when it doesn't, you got to get out of the way and not fight it. Okay, notes are lagging a little behind. So if you're looking for a bond trade, notes may be you may be able to catch something. You may be able to catch something in notes if I could talk on a little laggard kind of move. All right, gold. Yeah, it's holding the 200-day moving average. It's not doing terrible here. Maybe a small head and shoulders, but overall, it's just in a range here. All right, I know some people are looking for gold to go higher. Right now, I don't see it, but I don't see it getting, crashing either. So, that's the thing with bases, especially with, first level bases or even second level bases, is that it can throw you. So I don't see anything that's saying short here, but it's too sloppy for me to look at this on the long side right now. Here's silver, 200-day moving average is tested and held. Here's crude oil consolidating right on the 50-day and the 10. So see if this can release one way or the other here. Grains, in a nice downtrend. Still looking at lifts for shorting opportunities here. I think soybeans, corn, and wheat have lower to go. Sugar, looks like they want to test the 2014. It wants to test, I don't know who they is. It wants to test the 2014 lows. Coffee on a little bit of a bounce, but really has to get above here. Right here at 184. Nice. So call it 185 before I'm confident even on the short term there. Lean hogs, 200-day moving average. Watch it for support. And live cattle again just keeps moving higher. Really nice strong uptrend. So let's do, we're at 12 minutes here. I apologize for the length of the video. Usually I like to keep these short and sweet. And when we get the newsletter out, I'm going to have a daily video there anyway. So you're going to be able, if you would like me to go into more stuff and hear in more detail, you'll be able to get that every market day. All right. So, but these weekly videos are usually much shorter. So anyway, now that I spent another minute of your time explaining, so again, I believe that we still have higher prices to go. I believe that the NASDAQ will hit 98.57 at a minimum before we pull back. Doesn't mean we have to pull back there. All right. I believe pullbacks and consolidations
stock
are
market
still buying opportunities.
.com.
If they aren't, and if we decide to trade lower, I am going to be watching the Russell 2000, the small caps, and the middies, watching the mid caps, MDY, watching them for downside leadership. Again, not seeing anything that's saying a big bear market, but look, a lot of people are saying, hey, you know what? We've overdue for a correction, and they're right. I mean, we're stretched here, so if we do correct, whether or not it comes before that NASDAQ number, I'm watching those two indexes for leadership to the downside. Again, any questions, tiny@stockmarkettrendsx.com. Thanks for taking the time to listen to my video. I will talk to you next week, or through the daily email. You could sign up